Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting and the final for 2025 episode of Synopsis. Please welcome our today's guest, Tzahi Kanza, the CEO of Syndica. Hello, Tzahi. How are you today?
I'm great. Thank you for inviting me. Happy to be here.
Always a pleasure to see new faces, new experts here. And today's discussion, knowing your background, will be devoted to the Web3 startup building. So actually one of the best ways to finish this year, I would say, without any price speculations, predictions, financial advices, just pure expertise and extremely insightful, I believe, advice for every Web3 startup founder, which is potentially hidden inside of every crypto enthusiast. And of course, we have a bunch of questions devoted to this topic today. But to begin with, since it's the first time here at Synopsis, let's start with the introduction. Could you please go ahead and tell us your personal journey in Web3? How did you start and what motivated you to build Syndica?
Okay, so I started with technology many years ago, and at the beginning of the maybe 2012, 11, 13, we got to know a little bit about Bitcoin, and we were mostly interested about the technology to understand a little bit, and also the philosophy and what it could be in the future. It was very early, so I didn't put a lot of attention there because it was there. And then at the end of 2016, one of my friends came and asked for help with blockchain development, and I didn't know what does it mean exactly. And then we went deeply into Ethereum, and this is how my journey started. So since day one, my focus were on startups that are using blockchain technology, and this is what I'm doing in the last 10 years. We are focusing on startups and innovation in the world of Web3. And this is what came into Syndica, because when we started, we noticed that a lot of the founders that we work with actually need a lot of help, because Web3 is very new, a lot of new things, very, very little stable places to step on. Every partner, company, whatever that you work with are actually new, and it's very difficult to find the right, let's say, third parties to work with. So this is the way that we develop the model of Syndica. Basically, the model is startups and innovation, looking at very, very early stage, and growing up the startups. I can go deeply in the next, minutes, but I think what happened is that we started a lot in the technology area, and then we found out that because we work with so many startups, we also have a lot of advantage in other places related to Web3, because we saw a lot of, let's say, activities related to the startups. So it can come from the infrastructure, and then go into, and then it can go into other places. For example, everything related to the TGE, so related to the token, how to move, how to sign contracts with market makers, how all of this is working, how the DEXs are working, how the centralized exchanges are working, etc. So the whole journey from the when you say, okay, I have a good idea, last minute when your token is out there and you're pushing. So in the last 10 years, we worked with more than 100 projects. From them, 15 as co-founders in a way. So we have very deep understanding of the market and the players, and we really love what we're doing.
Well, awesome. Thanks for sharing. And we see you a real Web3 pioneer from the early stage of the entire industry. And this is actually what makes a real early stage expert an expert. Awesome. And of course, we will dive deeper into Syndica and what you are building in the following minutes. And well, to begin this dive, let's start with a simple question. How does Syndica differ from other typical syndicates?
So basically, what Syndica is doing, our expertise in is in the very early stage. Of course, we support after that, but at the early stage, two guys, three guys, they come with a good idea, good team, and all the questions are coming there: how to raise money, how to plan the rounds, how to go to what we call product market fit. So all the small things that creates the first deck that you want to go to investors, we focus on. So it's a process. It's a process of understanding the market, understanding the capabilities of the team, and slowly, while discussing with third parties, understand that this is the right direction. Because what you think at the beginning that is the best product usually is not exactly what you'll do at the end. And if you're not agile, if you're not listening to the market, if you're not working with your future, let's say, users, uh, the challenge would be almost impossible to cover. Startups are very difficult in their essence because you start very slim, you start very weak, and you want to capture a lot. So there is a room for mistake, but let's say it's not a huge room. So you always need to take a look and understand where are you going, and what are the next steps. So for that, we set up Syndica. So Syndica is basically like a venture studio, meaning we invest in startup, we grow startups. We can start with very early stage, like I said, two guys with a deck, but we also do later stages. So this is our main model. And because it's a very difficult model, long-term model, usually a startup could last, 2, 3 years until you see its success. We also offer services to bigger companies that needs services that we are experts in. And the last thing is we are called Syndica because we are a syndicate of Web3 founders, not syndicate of investors, but syndicate of Web3 founders. And the idea here is that it's a group of people that lead Web3 startups. We vet on them. We know that they are good guys and they know their business. And it helps them, but also helps us a lot in execution. Because if I need support from someone who is expert in Web3 banking, I know that one of the CEOs that are doing Web3 banking will be the best for us to ask. So it saves a lot of time, a lot of misunderstanding. And again, because Web3 is so young, a lot of the third parties you're working with are not exactly what they're saying they are. So someone from, let's say, close from, let's say, inner circle, it can help you a lot to understand the differences in their capabilities. I gave an example of Web3 banking, and it's one of, I think, the best because there are so many changes in this market. So this supplier cannot support this country and cannot support this currency and cannot support these people and cannot support this geolocation. It's really complicated. And then maybe they support, but their fees for these specific regions are very bad from reasons 1, 2, 3, because they don't have this, they don't have that.
It's great to know that, as you mentioned, there is still at least a small room for mistakes for
Hmm.
the new founders. And of course, we'll speak about those two guys with the deck and how they can fail and avoid these fails shortly. But before that, since you've seen a numerous number of Web3 startups, I cannot even imagine the number. Could you please tell us how has your view of a successful startup changed over the years?
Hmm. Um, uh, Basically, it's simple, right? What is a startup? You have idea and you have team. So the idea should be checked by product market fit, meaning other people, doesn't matter whom, should say, I think it's also matching the needs of the clients. And then, of course, when you're a little bit more advanced, the client should say it. as soon as possible. Um, so you should find a product that people need, so they will use. You need to make sure that there's enough people or a lot of people that will use it, because you don't want to be small. And then you need to understand how much they are willing to pay for it. So basically, from product perspective, you need to see that there's a problem, and the problem is big enough that it requires a solution. Because if it's not big enough, then your startup will be very small, right? And it doesn't make sense. And then the team. So the team is people, and it's sometimes it looks easy because you say, okay, see their history, but it's also very difficult to see if one of them has the abilities to change quickly or to put all the energy that is needed, etc. So it's very challenging in this perspective. But the two things, there are no other ways. So basically, when they start, it's you need to take your chances, right? And to believe that these guys are able to execute. What is most important in a startup is the ability to execute. So you have a plan. Smart people come up with a good idea, good planning, good everything. Now, question is if they can execute, and you need to believe in these people. So if when we started, let's say end of 2016, beginning of 2017, when Ethereum came out, everything people thought that would be Web3, right? Everything, every idea. Okay, eBay will do Web3, Amazon Web3, everything Web3. The market evolved. And if we can take a look at what we've seen in the last 1 year, if we just want to pass all the last 10 years, we see that everything related to the connection between Web 2 and Web 3 is very strong. Let's put aside for a second AI, which is changing many, many things, and also made a huge mess also in Web 3, because now everyone says I'm Web 3 and AI. Everything is AI. But let's leave the hype for a second. We see that all over the world, there's a better adoption, both from retail, private people, and also institutions. So we do understand that Web3 tokens will never, or let's say in the next few years that we can see, will not change fiat, will not replace fiat. So the combination between the two uh, is very strong, and started like 1.5 years ago. I put a lot of emphasis, at least from Syndica perspective, into startups that are dealing with this, the mass adoption. Let's start to build products that people use, not semi-products that Web3 people are using. Because if we want to stay with what Web3 people are doing, it will be very difficult to move forward. So using a DEX or provide liquidity, okay, no problem. This is not mass adoption. Mass adoption means that I hold crypto, which I have no idea where it stands, but I know that it's safe, and I want to swap and get the best price, and I have no idea where it's coming from, and I don't care. And I'm not afraid that I will lose any key or whatever, because I have no idea about that as well. So for mass adoption, I think this is perfect. When we talk about small amounts, of course, if we're talking about institutions and millions, of course, it's different. But for the usual users, when we talk about hundreds or thousands of dollars, that should be the way. It should be like I go to my bank, I have everything there. And I have no idea if I buy a Tesla share or whatever, where it stands. I don't care, because I trust the bank. So in Web3, of course, trusting is a little bit different, because you cannot trust, but the feeling should be like I trust. So I know that it's there, because I know there's a cryptography that keeps my money there and what I have there, and I don't need to worry. And I know that if I lose this seed or whatever, it doesn't matter, because I can recover in a secure way. So I think this is where we're going, for the good and for the bad, because we see that in the last year, a lot of very, let's say, new innovations are not receiving their founding support, because the focus changed a little bit. Let's not bring something newer. Let's bring what already there into the mass, to the public or to the institutions. Or so, in a sense, it's a little bit sad, but I think this is how an industry matures. Looking at Web3 industry, we see that there's not enough big companies yet. It's just starting to form. So if before there were a lot of startups, small startups that really took big share of the market, now it cannot be. So this consolidation, this process um, will happen to Web3 as it happened to other industries. And we can start feeling it. You can see projects that are doing stable coins, for example. So there's a lot, but the issuers are not so many, etc. I can talk about it later, but I think that Web3 changed in the last year a lot. So founders need to take good look at the future.
Wow. Uh, Extremely detailed, thank you, and a very interesting point of view on the mass adoption. And I completely agree that it is impossible without actually being user friendly and providing convenience for the final users. Because right now, why do we call ourselves crypto enthusiasts, Web3 enthusiasts? Because we are enthusiastic about it and we are ready to deal with some technical issues, doing research and where the money, what is the protocol, what is the hidden behind the scenes. And yes, actually, this is what I was thinking about, that for the mass adoption, there must be no need for like doing this deep research, just feeling the trust. And wow,
Hmm.
that's the thing I will be thinking about until the end of the year. Well,
Hmm.
thanks for that. And well, here we came with the mass adoption after beginning with how a successful startup should look like. Well, the
Hmm.
next thing, which is even more important than discussing the features of a successful startup, would be the reasons to fail. And could you please tell us why
Hmm.
about 90% or so of Web3 startups fail, and what are the most common challenges the founders face?
Yeah. Okay. So it's like when you start, when you look at a startup, when like we said, two guys are coming, and you look at the product and look at the team, it always, bounce back at the end. So at the beginning, when you meet the two guys, you need to believe, right? Because you don't know. And you see what they think the product is, and you say, okay, I think it could be a good idea. But then these guys need to deliver, they need to execute. And same for the product. They need to make sure that there is a product market fit, meaning there is a problem, real problem that needs a real solution, and they can bring the solution, and the market is big enough so this solution can make enough money. And it makes sense to have a startup that is doing that. So from my perspective, usually, especially in Web3, currently it's not the execution. Currently, it's a lot about the product market fit, because a lot of startups that we see develop products that they think are going to be amazing, because they think that the future in Web3 is changing very quickly. And it means that I don't need to ask people if this is what they need. I can just gamble, because when I'll be ready in 1 year or 1.5 years, then the market will be there. So they say, okay, why should I check? I'm sure people will need it. And then they don't check. And actually, this is maybe one of the worst ways to move forward. It means that you're losing most of the resources that you have, time and money, developing something that you're not sure that someone will need. And when time comes, you have a lot of competition, because you just develop something that is not what is needed. So just believing that something will be needed is not the best way. I can give an example about AI, which bumped into our life in the last 2 years. huge amount of startups in Web3 moved into AI and agents and trading agents. But how many trading agent people need? So they said, okay, now it's not the agents. Let's do like the gold diggers, right? Let's not look for the gold. Let's sell. So, okay, let's build infrastructure. But who needs so much infrastructure when you don't have agent? Like you don't have, it's not there. It's not there yet. So the fact that the technology, AI can do many things means nothing. Means nothing. There is no problem that people needs it currently. It's not that people are trading, hardly whatever, and they just said, okay, thank God I want an AI to do it for me. No, because there is no real problem. People still, still are not in the position to use an AI for big money in order to do it. If they are experts, they will do themselves, right? The trading. So AI can be good for many things, but when 80,000 startups start in one day doing the same, only few of them will survive. It just cannot be. So when you ask someone, okay, look, but someone started 1 year ago already, and they have a lot of things that they built, and you want to start now, and what you're saying is that you'll do the same, you'll come late because you don't have the time. So the only thing you can do is maybe learn from them, see their mistake and improve, but you don't see the mistake. You don't say, I'm doing something better. You say I'm doing the same. So if you do it from day one, it's not a good strategy. Um, and we see it a lot in Web3. Um, Something that is very interesting in Web3 that doesn't come into life, let's say in Web2, is that we have a lot of change, everything from scratch, right? They need a DEX, they need, they need everything from scratch. Even if it's EVM, doesn't matter. So there's a lot of startups that basically are doing the same as others, but on new chains. This is a very unique phenomenon, I think, in Web3. Um, but again, let's leave that for a second. At the end, what we need in order to be successful is people who understand that the product needs to match what the market needs. And second, people who can execute. So when I say execution, there are a lot of aspects, but just dividing it to begin with, we have the B2C startups, basically, and the B2B. So from the B2C, basically what you need to do is bring users. So it's, let's say, in general, partnership and marketing. So you need to be strong there to understand B2C. On the other hand, B2B, you need to understand companies, their needs, institutions, their needs. So it's more into BD and different understanding of the market, the needs, etc. So when you go to look and you need to gamble who of these startups will be successful, this is what I'm looking for. Who can execute, if it's B2B or B2C. This is the first thing. If they have the experience, the knowledge in their market, and then the product. If these guys are agile enough to understand what really the market needs and deliver that. Um, Now, just a final maybe sentence. Startups are a risky business everywhere. So the fact that someone had a startup and failed means nothing because it's very difficult to be successful, even if you're doing everything the right way. It's so what I'm trying to say is even if the team is great, even if the product is great, you need luck always. You need luck always. And when I say luck, I mean to know someone from you never know how, but this someone is the one that really assists you to execute. And you need a good timing, especially in Web3. Timing is really important. In a bad market, you can really hardly be successful. The only thing you can do is to prepare for bad days. But if you went into a bad timing in Web3 and you didn't come prepared, then it's very challenging.
Well, a very interesting conclusion, I would say, and actually
Yeah, I
can
think it's an
can
easy conclusion. If you're lucky, you don't need anything, right?
yeah, it's not easy, and
Hmm.
the one who wanted to hear that heard that. That's the luck is just a part of that, and you need all
Hmm.
these preparations, good team and stuff, and it's a very I would say insightful part from today's discussion. I think then founders should rewind it and watch a few times and put the
Hmm.
notes on that, and to add one more sentence to what been said that the majority fails, but those who don't even try, they don't even have a chance to succeed. So
Hmm.
if you don't try, you will not win 100.
Exactly. Exactly.
And if you try, you have this chance. And I would say pretty inspiring. Be a founder, I would have
Hmm.
tried to do something. And one more important thing that you mentioned is the possibility to learn from other startups and successful startups. Let's take one real case study from what we have. A few months ago, we had a podcast with your colleague Tomer from Kima
Hmm.
Network. So let's speak a little bit about Kima actually, since it's
Hmm.
been one of the key projects associated with Syndica. Could you please tell
Hmm.
us what inspired Kima's concept and
Hmm.
based on their journey so far, what are the main
Hmm.
lessons for new founders actually that worked, what turned harder than expected, and other insights?
Okay, so talking about Kima, Kima is not the regular Web3 project. Because it's infrastructure, it needs much more resources, financial and also personal, and also much deeper knowledge into Web3 because Kima is an L1 on Cosmos SDK. So it's a fully working blockchain. So it means that you need to understand in everything related to the infrastructure itself, meaning setting up servers, validators, nodes, the chain itself, and then all the communication with other chains, and of course, after you have all that, you need to communicate with your clients and the ecosystem. So the ecosystem is liquidity providers and market makers. And your clients could be any type of applications from any chain possible. So it's very wide. You need to really deep dive into a lot of aspects in Web3. But the idea behind Kima was is very simple. So the idea is that Web3 blockchains and also Web2 is different silos, so they are not really connected. And when we say connect blockchain, usually we are talking about bridges, which are very risky and are not really the best solution for institutions. This is on one hand. And on the other hand, blockchains are totally disconnected from Web2, from the banking ecosystem. So, what we had in mind in building Kima is let's build an infrastructure where different blockchains and also Web2 can do the settlement. Um, and in very friendly words, it means that if we have someone who has fiat in his bank account and he want to get crypto without using smart contracts in a very smooth and secured way, can use schema. So um, let's talk about a user that is doing on-ramp. So he can use his bank account from any suppliers going into Kima. Kima, in a decentralized way, checks that this credit card was sent the money, and then it can order one of its pools to send crypto, for example. It can also do settlement for banks. that want to settle any currency they have or any asset they have. Um, One of them, the main example are Swift, for example. So if you want to do Swift kind of settlement without using any intermediary, then this is Kima. So Kima, like I said, is an infrastructure that other projects can use in order to do the settlement. So let's say that a project is issuing equities on chain tokenization and it wants to do settlement between different parties, can use Kima, for example. Cross-borders company that want to do cross-border activity, instead of having, for example, you send money and then there's the product and you need someone in the middle. So Kima can be the one in the middle. It always depends on the use case. So Kima has a lot of use cases. And we believe that in 2026, the main use case for Kima would be stablecoins because we see an inflation of stablecoins. They need liquidity, they are siloed. So, one of the ways to bring usability to new stablecoins is to enable very easy swaps between one stablecoin to the other, but not using bridges, using the native tokens and in a very secured way, not reduce risk not only when an institution is looking into the risk of using a tool. Avoiding smart contracts is one of the ways to attract institutions to go into using stablecoins or using DeFi or whatever, because the solution is safer. So that's the ideas behind Kima, and we're really looking for 2026 to finally see how it really works. Because as more institutions will come into play, then the need for Kima will be much higher.
Awesome, get it. And we'll be also looking forward for 2026 to see the new milestones, new achievements, and tracking your success path. And well, since you said it's not a typical startup in any ways, it makes it even more interesting case, and everyone can still learn and should learn something from it. And
Mhm.
well, let's move on to the next question and let's speak about your hub. Could you please tell
Mhm.
us how do you help Web3 startups through
Mhm.
it and what services you provide, and also tell us about your
Mhm.
venture studio.
Okay, great. So Syndica core capabilities is technologies. We are 60 people. Most of our activity is related to tech. In addition to that, we have product and business. But when I say business, mostly from the idea of how to build a startup in the first, let's say, 9 months. So this is our core to understand where but in this venture studio model, we have very limited capacity. So we cannot accept more than one or two startups a year. Why? Because it's very, very demanding. So the concept of taking what we say two guys with a deck and enable them in 9 months to execute best, which is our core model, is very limited from its capacity. So the services that we're giving are mostly related to technology, Web3 technology, architecture, consulting, etc., product, etc., and then also from cybersecurity related to Web3, not audit, but the generalized cybersecurity of projects when they want to go mainnet. There's a lot of cyber issues they need to make sure that they have. And the third thing is more into economics. So it's not token economics to build you how to give tokens. It's mostly about when you want to do data science related to the usability of products and test products in an economic way, then we have these services. And of course, the last thing is the syndicate, which is a place for Web3 founders to be there. So as I said, our main model is taking very early stage startups, and then we give services. But we also work with more mature startups, also with assisting them to find market fit or partnerships or thinking together about how to improve what they're doing. So I think in general, this is what Syndica is doing.
Sounds great. Thank you. And well, for the next question, it will be kind of a summary, I would say, of what has been said already in this or that answer. But still, let's combine or highlight it a little bit more. Could you please tell us what are the most common issues that startups ask Syndica to help with, and what support areas do you believe are most underserved for early stage Web3 projects?
Mhm. I think one of the, I know it sounds strange, but every founder is looking for money, right? And it's his task. CEO needs to bring money to the startup because startup needs money to survive. But I think one of the mistakes that startups are doing in the early stage is focusing only on trying to recruit. Um, and they put less attention on the chances of these startups to be successful. And I will explain what I mean. Before doing that, let's see that we are on the right track. Because once you raise money, you started a race that you cannot stop. Because when you raise money, you say, okay, no, now I raised, I need to develop. But just a minute, let's see that you really want to develop it, what you had in mind. And founder said, okay, but I came to the investor with this idea, now I need to execute. No, you don't need to execute. Now you need to think if this is the right idea. That's what you need to do. So what I think is really missing is the beginning 2 3 months. People running too fast to raise money, which is not a bad idea, but before you do that, let's make sure that the idea is correct. You talk to enough people to validate it. And then, okay, let's raise money. How much money we need? For what? What do we need to check in order to decide if this is the right direction? And we see a lot of example like this startup that raised money and everyone knows that they have no chance, but they're still going, right? They are going there until the funds are not there. So if I need to put attention of founders, sure, of course, raising money is not only the money itself. It's not the fund itself. It means that other people believe that what you're doing is right, so they are willing to give you money. This is really important. But just before that and during that, always, you need to be very alert to see what changed in the market and where we're going. And I really believe that this is something that is really missing in the market. I see huge amount of products that are beautiful, but nobody needs them because there was no problem that they want to solve. They just invented the problem and now nobody needs it. So if I need to say in one sentence, yes, product market fit all the time, always.
Well, thanks for sharing. And this sounds like a really thing that might seem basic, but it's fundamental, I would say. And this is the part that is usually being missed by so many founders. And instead of solving real problems and developing the product that has a market fit, people are usually
Mhm.
trying, not usually, but pretty often are trying to invent problems and solve these invented problems.
Exactly,
So yeah,
exactly.
seems like we have a great idea. There is no market fit. Let's invent a market fit for that. But this doesn't work, guys.
One of the issues that they said, no, 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 the market is not ready, right? So in 1 year, it will be ready. But why do you think they will be ready in 1 year? So even if you think that this is the future, no problem. After 2 months, let's check because you said in 12 months, now left 10 months. Let's check that the market is going in this direction. And they don't. So you see, like I said before, so many beautiful products that nobody needs.
Yeah, asking yourself like basic questions and putting yourself on the place of a final customer is never a bad idea, I would say, and it can save
Yeah.
a lot of time and a lot of efforts. And
Hmm.
I do hope that this idea will reach the minds of our audience of founders and potential founders. And we're moving to the next, I would say, section. Since the new year is already at the doorstep, let's devote a few final questions to the expectations of what awaits us. And could you please tell us? As well, looking toward
Hmm.
2026, what changes or improvements does Web3 ecosystem need to achieve to build more
Hmm.
successful startups? So, should we expect these fundamental
Hmm.
changes in the next year, and what should it be actually?
Hmm. Okay, so I think if looking at 2026 and trying to think what will happen, I think the first point to start is what happened in 2025. I think the major change is, of course, Trump, what is done in the US and all the changes, because what happened there is really influencing the whole world. So, what can we see there? More adoption from legal perspective. So, a lot of strength for stablecoins and the ability of people to use crypto in a way. And this influences also, as I said, other countries. This is on the positive way. Crypto is becoming part of the financial system. Um, at the same time, if we take a look at the support that was given to Bitcoin and other blue chip tokens, it means that a lot of resources, instead of going into innovation, went into investments in hedge funds that invest in Bitcoin, Ethereum, Solana, whatever. At the same time, we saw meme coins coming from Trump and his activities, and also meme coins are taking funds that should be or could be going into innovation. So in 2025, what we've seen is, on the one hand, blue chip tokens and Bitcoin getting a lot of support, and regulation is opening, and at the same time, less funds that are available, and mostly from retail investors. Less funds are that are available into startups. So if we look at 2026, I don't see any reason that this will change. Um, so startups needs to come much stronger in order to raise capital. It won't be easy. And if I need to put the sectors that should be into consideration is, as I said before, the connection between Web 2 and Web 3, more adoption, and more institution focused startups, if I need to guess. And AI is a good topic, but AI should be part of this solution, because the problem is not requiring AI. The problem needs a solution, and AI could be part of the solution. But I think these are the places where we should go in 2026.
Well, thanks for sharing, and we'll see. The time will show, and you even guessed my next question. But I have one more here to finish this discussion on hopefully a positive note. So the new
Hmm.
year is at the doorstep, and our traditional last question for our guests is. Um, could you please share some piece of advice with our audience? So, I mean, it's an open question. You can go ahead with even with the financial advice or call to action, or
Hmm.
just some a reminder of basic things, which is not less important. So, just take your time and your chance to
Hmm.
address directly to our audience.
Hmm. Amazing. So there's a lot of things I can say about Web3 after 10 years, right? But because I'm coming from startups, uh, I think that people that want to do things themselves as co-founders is amazing experience. However, you need to be very picky and think a lot before starting a new startups. You need to check again the team, your position, and what the startup is doing. And if I need to recommend, yes, try to do one startup in life. It won't be bad. It won't be bad. It's a really great experience.
Yeah, I cannot but agree with that. I even tried to do something myself, and yes, as it's been said, if you don't try, you have no chance to
You
succeed.
never know.
Yeah, and you never know. Of course, the experience is the most valuable thing we have, and thanks for reminding
Mm.
this. And yeah, for today, that's it. Thank you very much, Tzahi, for joining in. It
Thank you very much for
was
inviting me.
really insightful discussion. I think the founders and potential founders should watch it a few times, make notes, and keep it in mind. And yes, of course, thanks for our audience for watching us till the end. Thank you guys for staying with us through this year. Wish you all the best in 2026 and take care. See you in more episodes. Bye bye, everyone.
Bye. Happy New Year. Thank you very much.